Guys, good morning. Welcome back to a midweek live analysis with Prince Wonder. My name is Prince Wonder, and the Wonderful. Before we get into today's program, let me first say Happy New Year, and it's really nice to be back on the program. Uh, Hopefully, this year is actually going to be a lot better than the previous one. I wish you all the best for the year. All right, so let's get back to the market. Now, what we do on the program, as usual, is take a look at the market and try to determine what the markets are likely going to do, and we try to see how we're going to react to that as well. So we're going to be running detailed technical analysis on multiple pairs, and yeah, as always, I'm also going to be asking you what pairs you want me to look at. So just type them down in the group, and then when we get there, I'll take a look at them. All right, so let's look at the market. So we're starting with BTC. All right, so start analysis with Bitcoin. Now, over the last couple of weeks, well, the new year, as you can see, the market has been rallying upwards, although a slow, steady climb. And it ticked up over the last 2 days. And it seems like everybody's mentality has switched from bearish to bullish, and then we're just looking at further higher highs. Other sets of people are completely confused. Is this market going to continue going up? Is it going to come down? Now, let's just look at this chart to see precisely where we are and what we should be expecting from the market, and as such, know how we're probably going to be reacting to that move from price. All right, so over the last couple of weeks, say December, so my charts are still loading. We had a series of uptrends and pullbacks. So December we peaked at say 18,300 plus, and we fell back down to okay, our lowest for December was 16,250. All right, so if you notice, you see the market has been defending the $16,000 range, really trying not to break below it, except for in November where we really touched 15.5 give or take, but really didn't go below that. All right, so now we came back down and we had a weak pull out to 16.3 just last 2 weeks, yeah, about 2 weeks ago, and the market pushed back up, and right now we're seeing really large price movements. Personally, I think I would attribute a lot of that to the new year and a lot of people pushing back capital into the market. And this long consolidation was, people selling off for the end of the year and just staying out of the market in general. So we didn't have a lot of momentum during that holiday period, well, before the holiday and during the holiday period. So now we have a lot of people coming back into the market, and that fresh capital and buying back into the market really is just upticking prices. All right, so now we've pulled out. The question now is, are we going to continue doing this, or are we going to drop back down? All right, so looking at past price, we've broken above a certain key level for price, and as it is, it looks like we're still going to continue going up until we hit at least 17K. Yeah, 17.6. Now you see a lot of these price movements for BTC these days are actually really within a very small, tight range. Okay, unlike before where you're analyzing and then you're saying $1,000 move, 1,500. A lot of price movements for BTC these days really are just capped around a few $100s. All right. So look at over the last 2 weeks, the uptrend we've been talking about for BTC really has just been between 16.3 and 17.5, which is just $200. So we're not expecting really this large price movements from BTC. I think the best way to trade this market is using margin or leverage. Okay, so you may actually make the most of these little price fluctuations. Now, unlike BTC, alternate coins have really been doing very well. They've been climbing like really fast and really hard. Some of them going as high as 60%, like in the case of Solana. Solana really outdid my expectations for it. Now, I initially plotted this Fibonacci during the December period, where I mentioned in the group that I'm expecting some kind of a recovery from the market in January. but it actually far outlived what I was expecting. Really did not see above $11, give or take, because I was, because of how Bitcoin was moving, I wasn't really expecting too much from the market. But as you can see, Solana really, really outdid those expectations, like spectacularly. Yeah. So from from $8, it actually got all the way to 17, which is about 100% movement over the last 2 weeks. It's really, really crazy and impressive at the same time. Now, just as saying, this still puts us in this weird situation whereby we're looking at, is the market actually going to retrace? Are we going to see a bullish continuation? What are we expecting for price from here? Personally, I actually think this is a breakout retest, possible bullish continuation kind of situation. So possibly be looking for a buy on Solana on the short term, of course, not looking at anything too big, but just a short buy for Solana. Tight stop loss, just a retest of the previous high. It could possibly go a lot higher than that, but trying really not to push my luck on this one. So just a retest of the previous high, and yeah, but you could just have that as TP1. You could push it all the way up to this point. That's 18.5 for your TP2 if it actually goes that high. You see, the odds are actually really good on this trade. So whether TP1 or TP2, you actually have just about 2% stop loss. So you can easily trade this with futures 10x, and you'll still be within a reasonable RR range. All right, so let's take a look at ICP. Now, me, I'm actually very old school. I prefer to just trade a couple of pairs rather than looking at a lot of random pairs in the market. Okay, I prefer to just stick with a few that I know their movements really well. So it actually works better for me like that. If you understand how it moves, you really don't have to be in the market all that much. When you come, you just know how it moves already. So you just follow up from where it is. Okay. Yeah, I'm trying to look for a minor support between these two ranges. So I think there's one here. I think that's about where the market reversed from recently. Yeah, okay. So now for ICP, it looks like we have a little range that the market is consolidating in here. Okay, so it looks like the market is consolidating within this range. And doesn't look like we're in a position to be taking any trades right now. Although on the short term, sorry, one second. All right, so on a smaller time frame, we could actually possibly see a little scalp move between this range. When I mean scalp, just a short-term swing. Okay, so this looks more like a breakout, possible retest. If this actually forms a morning star here, we could have a bearish continuation. So possibly we might have something like this. But if it so happens that we break above that range, you could take a buy from here. Remember, this is just a short-term move, so either way, it doesn't really. It's just a quick cash grab on ICP. So it's really not something that's going to take time. Probably an hour, 2 hours, and you're out of this trade. Okay, so but you actually have to move your stop loss probably a little closer just to see how it moves. Remember, not every trade has to be high risk or long term. It could just be a very short enter come out kind of situation. But mostly, I'm actually rooting for a sell on this one. It certainly looks like it's going to drop. So I'm looking forward to a sell on this. My stop loss where my buy entry would be, and my take profit back down there. So you have a decent 1:7 odd. Well, they happen. So yeah, that's that with ICP. Now let's go to the forex market. Let's take a quick look at some of these pairs. Now, of course, like I said, we're going to be looking at pairs that you recommend. So please send messages with the pairs you want me to look at in the group, and I'll be going through them accordingly, one after the other. All right. Okay. So Euro USD, of course, we can actually look at the forex market without starting with perhaps the most traded pair on the market. All right. So now, first thing you need to understand is over the last year, 2 years, the USD has really dominated the market. Right. This is 2021. This is where 2021 started. And you can see from 2021, 2022, it has been a steady sell-off for the euro against the dollar. All right, it has been a crazy sell for the euro against the dollar, and the euro really just started to recover late 2022. Right, if you look at other forex pairs, you notice the same trend on literally all of them. You notice the same trend on literally everything trading against the US dollar. They all had this crazy they lost value a lot against the dollar, and I think it's mostly due to the whole post COVID-19 thing. It actually messed up the economy really badly, and the entire market felt it. You see, basically almost the same chart. You see that 2021, same thing here. If you look at other pairs against the dollar, I think gold may have fluctuated a little bit, but even gold also had its fair share. So you see this 2022 March sell-off. Basically all through 2021 or early 2021 was just consolidation and gold really not moving at all. So now coming back to the euro, to the dollar, euro. Now you see we've started to climb from September, and right now it seems like we've hit a really strong resistance in price. Okay, 1.07. Sorry, my network is not that good. Trying to load. Okay. All right. So we broke out of this key support. I think a few days ago. Okay, early December. So early December, we broke out of this key resistance, and well, trading above it is actually a very good thing for us because this support actually held from 2015 all up until last year before it broke. So it's actually a very key support, and so breaking above it is kind of like a bullish continuation sign for the market. Now, this is another resistance that we're going to have to deal with, which is where the market is right now. Now, the question is, are we going to continue going up, or are we going to react to this resistance, and just how much of a reaction are we looking at? Uptrend, downtrend, to try and see if we should be going more on a buy or we should be looking at a sell. Now remember, this program is about looking at what the market is likely going to do. Once you identify the general trend, you can just break it down into little steps and then just take trades as seen. Okay. So now coming down to the 4-hour chart, I just had to use the 1-day chart so I have a much clearer, wider view of the market. Now coming up to the 4-hour chart, you see we had the higher high, higher low channel, and the market really has just been consolidating. Basically, for most of December, we broke out of that channel, came back down here, pulled up a little bit, and it seems like we're having trouble at this resistance. The market is consolidating and really not, it's trying to show bullish signs if you see those wicks at the top, but it's still getting pulled down, right? So we still have a lot of sellers in the market, despite buyers actually trying to push the market up. Sellers are actually still not giving way, and understandably so, because if the market should break above that resistance, then it's actually going to be a very wild, large movement for price. So on the short term, I think it's best to just break it down to a smaller time frame and trade the consolidation within that range, instead of trying too hard to wait for a breakout that might take a very long time to play out. Just look at on a smaller time frame, If the market is going to react or reject from there, you simply take a sell. I think it's already selling. You take a sell, you stop loss above the range, above the highest points of those ranges, and then you put your TP at the bottom and you're good. You see, we have a decent 1:2.23. So this is actually trading really isn't all that difficult. You just identify a trend and pick a part of the trend to trade. Okay, you don't even have to understand the entire market. You just need to be able to predict the next likely move, right? And then you're good to go. You just set your stop loss and you're golden. All right. So let's take a look at one more forex pair. Okay, let's just look at Euro JPY. Okay, so starting from a higher time frame as well. Okay, so it looks like JPY has been receiving a pounding from Euro for a little while. So Euro has actually been gaining over Japanese yen while it has been losing against the US dollar. It's actually weird because the JPY and the US dollar really are very correlated, and you'd expect that when it sells against one currency, it usually just does that across the board with USD and JPY. But this is actually interesting to see. All right, so coming down to what the market has been doing, clearly it's been a one-sided battle between Euro and JPY. Now, on a smaller time frame, or coming closer to what the market has been doing, basically for the Ember months, we had a really steep sell for the Euro, so it lost against the JPY. So now coming back to, well, this year, we've actually started to see recovery from the 3rd of January. The market has started to pull up. I think basically since the market opened, the markets have started to pull up and the euro has started to buy. Now we're coming up against a very important resistance here that could really determine what the rest of January is going to look like for euro. Now, personally, where it is now, really can't take any trade. Coming down to a lower time frame to see just how the market is trading. Yeah, probably still the same thing. Really can't take a trade here until we get back into the zone. But let me see. We still have some minor zones I haven't identified. Yeah, still need to see price enter this zone. Now, the reason for that is if we take a sell from here, given that we're approaching a resistance, we take a sell from here, we're going to have to put our stop loss above that zone. So if it breaks out, it continues to move, you know the drill. And our first take profit is going to be at the middle here. Now you see we have less than 1:1, which really doesn't make any sense. And if we should wait to buy within the zone, you see that one less than 1:1 actually pops up to 1:2. So timing and where you enter the market really is absolutely important. It's not just buy, sell, or that it's going to play out, but the odds are actually just as important. Okay, so we need to wait for the market to really enter that zone before we can trade. All right, so I saw that GBP card. All right. All right, so GBP card. Okay. Mm. All right, so let me just work with what I have here. I was trying to confirm those support and resistance I drew, but it's taking a little time for my charts to load. All right, so what we have here, clearly really don't have much on the 4-hour chart, so I'm just going to be breaking it down to the 1-hour chart, see if we can find a smaller trend to trade. By the way, if you want to understand what I'm doing or this color coding I'm doing, learn top-down analysis is absolutely important to give you a very good grasp of what's happening on different time frames and how you can select and pick different trends on the market or on the chart to trade. All right, so on the 4-hour chart, we have some major resistances, and then on the 1-hour chart, we have some other ones. So now the blue one is the one I just drew on the 1-hour chart, and as you can see, we bounced from this zone, broken out of that, we tested, and right now we're really just consolidating in this area. Now on my RSI, looks like, well, meaningful information as well. We really are not bearish, but we're not clearly bullish as well. So I'm just going to be working with price action on this one. So now the market has actually broken out of this zone. So this is clearly a support, broke out, retest, fake out, enough strength to pull back up. So clearly we have something here. So we can actually simply just take a buy if the odds on this trade are actually good, based on what I've seen. So it really shouldn't be too scary to take a buy and just watch out for what the market does in the end. So we have a decent one ratio 2.5. So we could just take a buy here, see how the market reacts within this zone. And if it plays out really good, fine. If it doesn't, it's 26 pips. Okay, so sometimes you just have to play the odds. Um, the likelihood of the market breaking the support is less than 30%, give or take, based on what I'm seeing. Um, Chances of it going up to the next resistance absolutely really high. So it's most likely going to hit our TP anyways, provided the market does what I'm saying. And so, just weigh the odds and the likelihood of the market playing out, and you have a really good trade if everything adds up, of course. So now, this is basically what we're going to be doing every week, Wednesdays. I'm thinking of adding Sundays before the market opens. We take a look at certain pairs, see how they are going to react on the markets open before the market does, and then we just go in. So let me know what you think about the pre-market open analysis Sunday evenings. If you'd be chanced for that. Now, this is all how as far as we're going to go tonight. This is as far as we're going to go this morning. So, if you have any other analysis you want me to do, just send them in the group, and I'll quickly just make a short clip and send in the group. In the meantime, as soon as we're done, this video is going to be going up on YouTube. So if you missed any part of it and you want clarification, just check on YouTube and the video will be there for you always. All right. Have a nice day, guys. Happy trading.